All right, good morning, everybody. Happy Monday. Going to get started here in just a couple of minutes. All righty. Okay, I think we should get started. It's already 3 minutes past the top of the hour. Good morning, everybody. Happy Monday. It's April 21st. It is actually a holiday today around much of the world. So global markets, for the most part, are actually closed today. U.S. equity markets, one of the few markets where there is liquidity, meaning markets are open. Futures markets are open to some extent. I think what you're seeing here this morning is actually even more concerning, considering that global players might be, at least to some extent, absent. And what we are seeing this morning is, of course, a further de-dollarization, meaning the dollar under pressure, which is exactly what you're looking at here on your screen. So we're going to touch on that here in just a second. Notepad. Here we are. So before we get started, a quick reminder, Serge Berger here from thesteadytrader.com. This is our morning call or morning show, whatever you want to call it. Set the market, it's called. We're going to spend the next 10, maybe 15 minutes or so going through the top few things on my notepad. And we are going to start off here with the dollar. If you're here for the first time, please make sure you subscribe to the channel. Very important, so you get it updated in real time when we go live with our live analysis. And of course, it helps us out to be able to continue to do this show, and also give us a thumbs up, like as always. All right, let's get started. Top three things on my notepad this morning. Number one, certainly the dollar. So we're going to start off with the dollar, and then we're going to look at the dollar, and we're going to be looking at the dollar through the lens of what it means for gold and where gold might be going. And then we'll touch on silver again a little bit more. We touched on silver last week, and the past few weeks, actually, silver getting a decent bid this morning. And then, of course, we will look at the equities as well. I'm seeing a lot more people getting nervous now, which to me is a good sign, because I think a lot of people are still way, way, way too complacent as far as how things might be playing out here. So that's what we're going to do here for the next 10 to 15 minutes. Let's get started. What you're looking at here is the dollar, and this is essentially the return over the past, few days, basically since Friday, of the dollar versus major foreign currencies. You can see the dollar is down versus most currency except for the Turkish lira. Got to take that with a grain of salt. Can't take that one too serious right now from that perspective. But you can see the dollar is down certainly versus the franc, and absolutely pounded versus the European franc, the Swiss franc, excuse me. The euro as well, very strong, and other currencies really, even the Russian ruble, believe it or not, very strong. So what is happening, and is it maybe getting to a point where this is getting a bit too much? So what's happening, and this is kind of point 1 and 2 here all in one, is I'm going to switch over to some charts so you can see this best possible. We are essentially seeing a de-dollarization, so meaning there is money coming out of the dollar and going out of treasuries essentially, and going into very specifically gold. The question is, when is that done, and how much longer could it continue through the long term? So let's just take it one step at a time. So first of all, what you're looking at here is the chart of the U.S. dollar. I've got the relative strength index at the bottom. It's not a great indicator, but it's an okay indicator. We have way better indicators to tell us when something is getting extremely overbought or oversold. Let's focus on this one first. So if we switch on over to U.S. Treasuries and we look at the 10-year yield, you can see that the 10-year yield is once again pushing higher this morning. Okay, so this is basically foreign central bank, foreign owners, and it doesn't always have to be, but right now it's pretty clear that this is what's happening, are basically selling treasuries. So bond yields up means the bond prices is down. Bond prices down, bond yields up. And so when bond yields are up, it's a result of investors selling, in this case, 10-year treasuries. Well, what's interesting is typically when that's happening, the dollar isn't doing what it's doing, but the dollar at the same time is going down. So if you look at the dollar index, this is what the dollar index is now like. This represents this, right? This is now the dollar index as a basket. It's a complete catastrophe, quite frankly. The dollar is essentially in free fall, right? And so you can very specifically follow this if you see it, right? So all these global currencies are up versus the dollar, and it's very much being depicted here in yields, right? So yields are up, meaning treasuries are getting sold. The dollar is down, so that means that people are actually coming out of the dollar, right? So they're selling their dollars. And where are they putting their dollars? Well, they're most likely putting it in gold. And we can see that. It doesn't take a brain surgeon to see this, because if you overlay the chart of gold versus the chart of the dollar, you can see very specifically that this is exactly where it's going. Okay, so the price of gold is going up. The price the price of the dollar index, if you will, is going lower. So it doesn't, again, it's not that hard to see if you know where to look, but this is what's happening. Now, why is it happening, and what might there be a trade, right? For a lot of you guys are just saying, Serge, I don't really give a shit about all this big thing. Just give me a trade. Wrong attitude, by the way. You're going to blow up your account. But, for those people that care about actually understanding it, let's focus on you guys. Okay, so at the end of the day, we're probably getting to extremes here, both in the dollar and in gold from a trading perspective. I think long-term, the dollar will probably continue to go. Longer term, let's say, I don't know, next year and a half or so, the dollar probably will continue to slide, and gold will probably continue to go up over time. But the question is, what's sort of the next few weeks, maybe a few months, right? I think at some point we're going to get a pretty serious bid in the dollar, and meaning the price of gold will probably go down. Mean revert, right? And it's the same chart, so it doesn't really matter whether you're looking at the dollar, which is going up, which is going down, or gold, which is going up. Again, it's the same trade. So this is what I've been trying to explain to people for the past few years when no one listened because they were just NVIDIA starstruck, and that AI trade is now over. But no one cared because it was NVIDIA all day, every day, and now it's over, right? That doesn't mean those stocks have to fall apart, but there's now way other forces that are way more important than what color jacket Jensen Huang wears on stage, and so I think this is important to understand because we're probably going to get mean reversion moves, and so this is now where we get to a trade. So I would imagine that we're going to get to a point here sooner rather than later where the price of gold is going to give us a signal that essentially is what our vertical X Pro indicator comes in handy for, telling us when something is severely overbought or severely oversold. In this case, it'll be severely overbought. And I'm showing you this because this hasn't happened in a very long time, right? And a very long time, in this case, looking back a year. We are actually getting a vertical X Pro indicator giving us an overbought reading in gold. Now, it's actually not yet ready, but I'm just warning everyone here that we are getting an exhaustion buying signal here for the near term. That's an exhaustion near-term signal in the price of gold. I need to see a decent down day in the price of gold. We haven't had that yet. Obviously, price of gold is up almost 3% this morning. But I'd be looking for that, because if that happens, it'll most likely be a result of the dollar index bouncing, right? So you might say to yourself, well, Serge, this is all good and well, but how do I take advantage of this with a stock? With a stock, it might be a bit more challenging, but I'm sure there's an ETF that one can buy. So, for example, if the dollar gets very oversold, the UUP ETF, for example, Again, would be like being short gold for a trade. And there's levered versions of this, and I'm sure you can ask ChatGPT to find you a levered version of all this stuff if you want to, or use options or whatever, or futures. But something like the UUP ETF, if you don't want to use leverage, is probably an interesting play. Again, we probably need a headline for this. So I don't know what those headlines are, but I wouldn't be surprised if the headline sounds something like, okay, we have a deal with Europe, or we have a partial deal with China from a tariff perspective. I don't know. That's just what I'm envisioning could happen. Or we have some sort of a ceasefire agreement, Ukraine, Russia. I don't know. Like, none of this right now seems very likely to happen right now, like today. But I don't know. Like, this is the point about this kind of a market. We need to have a plan and a repeatable process. And that's kind of what we're trying to do here, is making sure we have a process. So I'm really kind of waiting for some sort of a headline. Again, I don't know when that happens. I don't even know if it happens, obviously, but I think we're getting closer because the dollar is now reaching levels that are quite severe. And the dollar going down isn't really the big problem. The bigger issue is that 10-year yields are once again climbing. It's not crazy, but we know what we know, and this might be interesting for those of you guys that are new to this business. What we do know is that the White House and the Treasury are watching the 10-year yield, and we know that 4.5% in the 10-year is where they draw the line, at least for now, right? That can change. But we know that's where they started talking about, April 9th. You can go back and check. They started talking about the 90-day pause on some tariff implementations, right? And so I think you want to watch that very closely if we were to get to that point. But you can see that, the foreign investors, so the United States has what's called a capital account surplus. And I don't want to get all wonky on sort of economics here, but this actually matters to your portfolio, believe it or not. And it matters to your trading account. If you don't know what a capital account surplus is or a deficit, go Google it, but I'll give you the basics of it. Basically, the United States has a trade imbalance to the negative, so trade deficits with a whole bunch of countries, which, again, depending on how you measure that, may or may not be making sense to be tariff, but that's not for me to declare, of course. But as a result, the United States has a capital account surplus. A capital account surplus is when foreign investors are actually investing more in your country than you are investing in other countries. And for the most part in the U.S., this is working is by companies that sell in the United States are then buying treasuries or even Max 7 stocks like certain foreign central banks. But that when that money repatriates and goes back out of the United States, which is some of it, not all of it, right? Some of it, it's gradual, and which has been happening since April of last year. I've been talking about it tirelessly. No one cared. No one even cared to listen one bit. But it's happening, and it's accelerating. And the result of that is higher yields, a much lower dollar, which is what we're seeing here, and that ultimately, could continue to put pressure on the U.S. equity market. So, if there's one trade that we're looking at here is, again, I'm looking for near-term oversold readings in the dollar, near-term overbought readings in gold. Again, the price of gold is up. This is the scissor, right? Gold price up almost 3% today. The dollar index down materially, then down today. That's really what I'm looking at here right now to kick off the week. The other thing that I'll quickly mention, and if you guys have any questions, please let me know, is Bitcoin, right? So, we've talked about this quite a bit, and I realize some people don't care about Bitcoin, and that's totally fine. I do think everyone should care in relation to what it actually means for global liquidity and risk appetite. And so what we talked about last for a Thursday in Set the Market here is we talked about how, I'm going to use the word surprising here, that may not be the right term to use, but how, I guess, notable it is that Bitcoin is holding up as well as it is, given the fact that we have de-risking taking place in the market. And we could look at this through the lens and say, okay, that retail investors are not scared. They're not, which is one reason why I think equities ultimately will go lower again. Maybe not right now, but the fact that the Bitcoin is holding up well tells us also that there's now actually also institutional investors that are buying Bitcoin with some of the dollars they're selling, right? And this is and again, you can see it, pound for pound. You can see dollar weakness, right? Where are those dollars? Are those dollars going? This morning they're going into gold and they're going into Bitcoin, right? So if that is something that holds up, then Bitcoin may soon be at a point where it starts to actually turn into fresh bullish momentum. It's right now it actually is bullish momentum, but very, very, very sloppy. That can change in a matter of days. If you're a Bitcoin bracket receiver, I updated Bitcoin bracket. It's going to go out at 1 p.m. this afternoon, and it's going to let you know that Bitcoin remains long-term neutral right now, although it's obviously very bullish long-term, but we define long-term as multi-month slash multi-quarter. And then in near term, we've turned bullish trend a trade, so from a momentum perspective, but it hasn't really taken off yet. But it looks like today that it has the capacity to do so. I think if it overcomes 90 grand, you could see a move higher. So again, this very much depends on how the dollar wants to act. I do think that it's possible that if the dollar were to pop and gold were to sell off, that Bitcoin once again stalls. So it's a tricky situation here. That's why, to me, the highest probability idea right now is to look for a short-term overbought reading in gold, a short-term oversold reading in the dollar, and I think there are trades to be had there. So those are things that we're watching. I'm going to move on over to trade ops right now. We're going to be seeing if there's some trades to do this morning. The equity market is down again this morning. And if you are part of our boot camp, our 3-day boot camp, we start our first session, day one, for about an hour and a half this morning at 10 o'clock Eastern. So that's actually in 40 minutes. And then we'll continue tomorrow and Wednesday. So thanks all for being. We'll see you guys back here tomorrow morning at 9 o'clock Eastern, New York time. And again, if you're in trade ops, we'll see you there. And if you're in the boot camp, of course, that starts in 40 minutes at the top of the hour. See you there and have a great start to the week.